Okay, well, let's get some quick global perspective now. Fook Hien Yap is a senior investment strategist at Standard Chartered Bank. He's joining us now to take some questions. Mr. Yap, good to have you with us here. Thanks very much for your time. So there's been some talk that over the next 1 month, over the course of the next 1 month, in the US, we will see a very large amount of liquidity contraction as the US Treasury rebuilds its reserves. It's able to do so now because the debt ceiling is no longer an issue. It perhaps is one of the largest we will see in a single month. Will that, to your mind, have an impact on equity markets? What's your view?
Yeah, thanks very much for the question. Very good to be here. Yeah, we have looked at that and we've discussed it before one of our publications. We think it will be manageable. It has been well flagged. If anything, the whole issue about the debt ceiling was discussed. When it was resolved, it was seen as a positive thing. The thing about the liquidity drain, we think it is something that's very well expected by the market, and we think that it will be something that can be managed, can be digested by the market.
Fook, good morning and thanks a lot for joining in. How are you approaching, as an investment strategist, how are you approaching emerging markets like India now? This has not been such a great year for India if you compare it to a lot of, the global peers like the S&P 500 and the Dow. Give and take everything, the rally has been just under 5%. What is the expectation for the rest of the year and where do your preferences lie?
Yeah, thanks very much for that. I mean, we do take a 6 to 12 month view, and within the global equity space, we still prefer Asia. Okay, so we prefer countries like India, China, and Japan as well. We think the trajectory for that is towards more growth. The China, I think we've seen some rate cuts there, just showing that the policymakers there are quite serious about growth, and they want to be able to stabilize growth. We think we see the prints in India macroeconomic growth is very, very strong, and the RBI is signaling that they are already holding off in terms of further rate cuts and taking a bit of a pause. And in Japan, we see a lot of the Tokyo Stock Exchange trying to prompt the companies to improve the return on equity for companies with a very low valuation. So we do see the whole region in Asia as being preferable to the US and to Europe, just because we think one is the policy is a bit more supportive for growth there. Valuations are more attractive, and as opposed to being in the US and in Europe, where there's the signals of more rate hikes to come, and the intention there is really to fight inflation, to slow down growth. And that is something that the policymakers are very clear that they want to do, and because of the different point of the cycle, really, I would think Asia is much more attractive. It requires some patience. We see that in China, it ran up quite a lot at the start of the year, and then came back down for various reasons. But we think the geopolitical risk, some of that is being mitigated with visits like Antony Blinken and various business leaders to be visiting in China.
Fook, hi, good morning. So you seem to like all three markets, right? India, China, and Japan. Within the three, what's the pecking order? Because we've been hearing a lot of commentary that seems to suggest that money will keep moving out of China, and that money will probably find a home in Japan and in India. But what is your own preference?
Yeah, we do not have a pecking order at the moment. At some points of time, we do, but at this point of time, we do not. I mean, within those markets, including Korea and Taiwan as well, I'll throw that into the mix. We have, between those countries, quite similar views. But the distinction we try to make is Asia versus US and Europe. And that's where we think the opportunity is. Look, I mean, each market has their own pros and cons, right? I mean, they are good for the reasons I cited, but then in India, we see the valuation is very high. It's come off its peak, but it's still very high relative to countries like China. China has to contend with geopolitical risk. Japan is seen as being cyclical. So there are pros and cons for each market, but overall, I would say that we like all these regions within Asia, especially relative to the US and Europe. And that is how we're talking to investors, or to talk to investors to rotate towards Asia. But at the moment, I'm going to be unable to give you a pecking order between those countries. We do not have a house view there at the moment, yeah.
Right, that's some Southeast Asia supremacy, right? You like India, Japan, China compared to a lot of the global peers. Great to hear that. Fook, appreciate your thoughts. Thanks a lot for joining us and speaking to us on CNBC TV18. Well, let's slip into a quick break on that note. On the other side, our entire team will be with us to help us prep for the day and tell you all about the top stocks you need to watch out for as we begin a brand new day of trade.